Morning, everybody, and welcome to what I think is the third webinar that Cathy and I have hosted as we've been advancing our Calico project. This morning we'll be focusing on our project mineral resource update that we made back on March 6th, so last week. I will spend a bit of time presenting some context, because I do know that there are people on the webinar that haven't had the opportunity to become that familiar with the story just yet. After Cathy and I have been through the presentation, there will be an opportunity for us to answer any questions that you may have. You'll see there should be a question and answer button that you guys can enter questions into the webinar, and at the end we'll address those. If we run out of time to address any specific questions, you can always reach out to us directly at info@apollosilver.com. So let's get started. We'll start with a cautionary note, a standard cautionary note. We will be making forward-looking statements as we move through this morning's webinar. We will also obviously be talking about the updated resource estimate. The slide here contains some cautionary note on mineral resource estimates. It also contains all of the inputs into the resource estimate that we've recently updated. We'll go through that in some detail, so we don't need to spend a bunch of time on it right now. As we have in the past, Cathy and I will be speaking to you today. A bit of my background: I've been in the industry for a number of years now, almost 20 years with BHP, most of those overseas, where and then came back to Canada and joined Peregrine Diamonds, which is where I first met Cathy. And Cathy and I together took that through resource development and its eventual sale to Peregrine Diamonds. Since then, I've been a director of groups like Pretium Resources, which some of you may know was sold to Newcrest recently, and Mountain Province Diamonds. And I currently sit on the boards of American Copper Development and American West Metals. Cathy, do you want to introduce yourself?
Yeah, so I've been working with Tom off and on now. It's our third company together in 11 years, and we enjoy working together and have seen success. Over 20 years, I've spent most of my time through almost the whole value chain, exploration, technical leadership, but a lot of resource development, taking early stage projects through to pre-feasibility, feasibility, with great team members. Before I joined Apollo as vice president, I was with Ivanhoe Electric for 5 years. And just recently joined United Lithium as an independent director, and I'm a professional geoscientist in BC.
Thanks, Kath. Look, we won't go through any of the other team members, but we do have a very strong and quite senior board chaired by Andy Bowering. Andy's behind things like American Lithium and Peregrine Diamonds. Other directors of note: Steve Thomas. Steve and I first met when he was CFO of De Beers Canada. He is now CFO of Mountain Province Diamonds. And Jocelyn Thompson, and Jocelyn, you see in the center of the photo, is now retired environmental permitting lawyer based out of San Francisco, and has spent her 40-year career permitting resource developments in California. So a fantastic resource for us to draw on as we advance Calico. Next slide, please, Kath. You know, look, what at a very high level, what does Apollo represent? Well, first and I think foremost, tremendous leverage to silver. And for those of you who saw the release on the 6th, you'll know that we have converted a very large portion of our inferred resource to measured indicated. And we'll get into those details, but that Calico project is now absolutely confirmed as one of the largest undeveloped silver resources in a tier 1 jurisdiction. We are in a stable jurisdiction, and I am going to talk again about California. And so for those of you who are new to the story, will understand why we've been able to advance in California when other groups seem to have struggled. Experienced team, which I've mentioned, and we are well financed. We still have a strong treasury, and we have no debt. And I think the big opportunity here for us is to really see a re-rating opportunity. We can start trading in line with some of our silver peers, because definitely on a measured and indicative basis, we I think are trading at a pretty significant discount. And I'll talk more about that as near the end of the presentation. So you know, I do get this question a lot. How come you guys have been able to advance in California when others haven't? And it boils down to a couple of things I'm going to touch on. First and foremost, we're in San Bernardino County. And again, those of you who know, you've heard me say this before. It is a county that understands resource development. They produce the vast majority of construction materials for the Southern California construction industry, which, as everybody would imagine, is very large, okay? Over the last 15 years, there's been excess of $60 billion in mineral reserves permitted in that county, okay? In addition to all of that construction materials, aggregate, limestone, you've got Mountain Pass, which is a rare earth. They've been fully permitted, fully commissioned, and are now operating. Castle Mountain is an operating gold mine, and they are now going through permitting to permit a large expansion. Baghdad Chase is a private operation, again, gold, that is also going through their formal permitting process right now. There's some big names that operate in the county, okay? So that's one of the things. I think we're in the right location. The other really important aspect in California and in the US more broadly is the type of mineral title that you have. And in our case, our resources that you can see there on that slide, Waterloo and Langtree. In the case of Waterloo, it occurs solely on private lands. I'm the taxpayer. I pay the county my property taxes every year. Langtree is patented claims, which is really similar to private lands in the situation for mineral development. Both of these land packages have vested mining rights. And all of this together means that when we have gone to seek our drill permits, we are working in the first instance with the county of San Bernardino. So as an example, we got our drill permits for our 2022 drill program in 6 weeks from application. And recently we got our 12-month extensions to those drill permits to allow for activity this year. And I think those extensions were granted within 2 or 3 weeks of application, noting that those were done over that Christmas period as well. Bottom line, you know, because of where we are and the type of mineral title that we have, we can get things done. Very well located as far as infrastructure is concerned. And I think importantly, we don't have any national monuments in the area. There's no national parks that do encroach on our land package. And the BLM lands that we do have as part of the broad title package are open for mineral entry. This is a few shots of what the area looks like. And you can see in the upper left, that is a shot of Waterloo. And you can see that we inherited a lot of existing infrastructure. Most of the drill roads that you see in that photo were completed by ASARCO back when they had the project, and added on to a little bit by Pan American. So we utilized a lot of that infrastructure, saves a tremendous amount of time and a tremendous amount of money. The other key takeaways, I think, from this slide are, you know, it is a fairly remote, rugged type of area. There's one thing you will not see there is Joshua trees, which are very sensitive in the California resource development context. And we have completed a biological constraint report, which was positive and didn't flag any fatal flaws from that flora fauna aspect. 2022, a big focus was obviously on three things. We wanted to upgrade the resource. We wanted to see if we could expand the mineralization that we already had declared in our maiden resource. And we wanted to start to de-risk the project as well, and to do that through some of our metallurgical sampling. And we're going to touch on all three aspects of the 2022 program today at the webinar. Okay, so let's jump to it. And I think one thing everybody should just really take a bit of time to think about is the conversion rate. We successfully converted 95% of the inferred resource at Waterloo to measured and indicated. Okay, the new resource statement that we announced March 6th, we now have 90 million ounces at 103 grams per ton, which is a slight increase of about 10 grams per ton over the 2022 estimate. Confirmed what we thought going in, that there was opportunities to better refine the distribution of the high grade. We also have 20 million ounces indicated at 91 grams, which is line ball, same as the inferred. This really flags a couple of things that Cathy's going to talk to as she runs through this around the consistency of the resource and the mineralization at Waterloo. And that consistency really just equates quite simply to reduced technical risk from a development perspective. We also have been talking about gold. You'll know that we had believed that there was the opportunity to include some gold ounces. And we were successful. We added 70,000 ounces of gold to that resource at Waterloo in the inferred category. And there's some opportunity to grow that, and we'll talk more about that. We, as everybody knows, focused on Waterloo. Langtree remains the same, and so that with the 750,000 ounces gives us that 51 million ounces of inferred that at Calico. This is oh, sorry, Cathy, over to you.
Thanks, Tom. So as Tom mentioned, we're going to focus on Waterloo because that's where the bulk of our work was completed in 2022. So this image, we're showing you the new mineral resource block model. The silver blocks comprise the large pit to the left, which were calculated at or above 50 grams per ton silver cutoff. And the gold is to the right in the smaller pit, which were calculated at or above 0.3 grams per ton gold cutoff. So measured blocks are shown in red, indicated in orange, and inferred in yellows. And they're shown in separate conceptual pits, and I'll explain a little bit more about that later. You'll also see the 2022 drill collars are in black, and the historic collars are in white. So you can see the coverage really of the historic drilling that we had to start with, and I'll also go into more detail about that. Some background information for newer people to the story. So mineralization at Waterloo is oxidized and stratobound and hosted in siltstones and sandstones of mid-Miocene Barstow Formation. And it's this lower part of the formation is in contact with volcaniclastics of what's called the pick handle formation. Basically, these sediments were derived from the pick handle. So the deposit is interpreted to be syngenetic, low temperature, hot spring origin. And mineralization is about estimated 17 million years old. So in early 2022, we declared the first public resource that Tom's talked about. And that was based on a wealth of high quality, validated historic drill and geologic mapping data from Pan American and ASARCO. So there's more than 40,000 meters of drilling across both Langtree and Waterloo that went into that. And we used that data to complete a first geology model and that estimate, which really gave us a good early understanding of the geology and mineralization here. And I'll walk you through that, the results of that, because it really gave us a predictive tool that we could use to optimize our drill program design. Because we had a good understanding of the early controls on mineralization. So basically by validating that historic data, we had a head start, and we saved a lot of time and money in our new program. And really that's why we were successful in converting so much of inferred to measured and indicated, as we had a solid foundation of data already. So on this slide, it's a summary of the data that formed the new resource to arrive at 110 million ounces of M&I of silver. We updated our 2022 model, not only with our new drilling, which was 88 holes across a little over 9,800 meters across the whole 1.8 kilometer strike length of the deposit. And we completed that program between April and November last year. So that new data, drilling data, we combined with new mapping data over more than 11 square kilometers, which was completed by Dr. Warren Pratt. And Dr. Pratt also mapped this project and area twice for Pan American between 2008 and 2012. So we really had a great head start here with someone well familiar with the geology. So the top image shows our new geologic model. And in orange, you'll see those pick handle volcanics. And the greens are the Barstow Formation. And the mineralized material is constrained by this Calico thrust fault. So that model was built on a total of 343 drill holes. So I mentioned we completed 88 holes in our program. 85 we used in the resource. 3 of them were just short holes we had to abandon because of drilling issues. So this is based, this model, on more than 28,000 meters of drilling. And that may not seem like a lot, but this is a near surface deposit. And our average drilling depth is only about 120 meters, which we have quite a wealth of long holes now after our new program, but a lot of the historic holes, particularly those completed by ASARCO, were very short, 80 meters. So this drilling equates to more than 23,000 assays, which we could use for the resource update. The bottom figure shows these silver and gold grade shells that our amazing team created, which were important tools that we used not only to plan our program, but optimize it as drilling progressed. So the silver shells are shown in purple, and I'll talk mostly about those. So they were initially created using the historic data drilling assays after our 2022 MRE was done, and using the new mapping by Warren Pratt. And so these were updated as we started receiving data from the assay data from the lab, initially during our phase 1 program. And as we continue to understand multi-element relationships in the data and distribution of silver, throughout the second phase of the program, we started using a portable XRF tool right at the rig. So we could almost update these shells in real time. And the reason why these were important is because this is what gave us our predictive tool to optimize our program. So it predicted, say, extensions of higher grade material. Using bedding measurements from the mapping, we modeled dips of the stratigraphy, and we could project down dip possible extensions of silver and target those with drilling. And we saw great success using this method, and it really solidified our confidence in our understanding of the geology and the continuous and predictable nature of the silver mineralization, which we've talked about before. So this turned out to be a very good tool. I'll note these shells were not used to constrain the block model. It's a complete different exercise. The good thing is that these shells created by our modeling geologist, Chris Gallagher, match extremely well with the block model. So again, just furthers our confidence in our understanding of the distribution of the silver. So we've covered details about the historic data in a previous webinar. So only do briefly here. This PowerPoint will be on our website after if you want to take a deeper dive. The point being, this was really great quality data. We have all the chips from all the holes Pan American drilled. We have the majority of chips, say, from the holes ASARCO drilled. All the pulps, that and the diamond drill core were all in excellent condition. So we relogged 3,000 meters of RC chips. We relogged 170 meters of diamond drill core. we completed more than 900 pulp reassays, and that's on top of the about 900 that Pan American completed on the ASARCO assays. In addition, we twinned 6 holes. So, you know, we have done our due diligence on this data, and we're really happy that we could use it and build on it instead of starting from scratch. So you'll see this figure quite a bit because it'll give you context later with some cross sections. So to getting into the resource in detail, first focusing on the silver. So our independent QP calculated a conservative base case cutoff grade of 50 grams per ton silver, assuming a silver price of $23.50 per ounce, which was based on data from the World Bank on silver price for the last 24 months. He also assumed processing costs of $20, G&A of $3, estimated surface mining costs of $275 per short ton, and a silver recovery of 65%. So the 65% is based on our preliminary results from our 2022 metallurgical test program, which we released on February 23rd, where we had encouraging silver recoveries in our bottle roll cyanide leach tests. And he also considered recoveries from comparable operations. So the blocks in the MRE are 20 by 20 by 10 feet and using 5-foot drill hole composites. And the drill hole spacing for the measured portion of the deposit are essentially 100 feet. And the measured classification was determined not only on drill hole spacing, but also the results of variography. And then to calculate reasonable prospects, revenues were calculated at greater than the cutoff grade and less surface mining costs to generate that conceptual open pit you see there. And so I'm just going to walk you through some sections through the deposit that illustrate some of the things that we've both talked about, like the continuity of the near surface silver mineralization and expansion opportunities. I'm going to go through section A first, through the center of the deposit there. And we've shown this section before in news releases, but that's because it tells, really gives a good picture of the amount of data we have and some of the opportunity. So this shows a good view of the thick package of silver mineralized sediments we have here. So I think this is 130 meters thick at a max. Historic holes are shown kind of semi-transparent with the white collars, and you can see there was quite a lot of historic drilling already. We really did have to do some infill drilling because some of the ASARCO holes, for example, didn't have the full multi-element chemical package analysis. So not only were we, say, infill drilling for grade, for silver grade, but it was to be able to get the full chemical suite because that was really important for modeling bedding horizons. You'll also see I've highlighted 2 high-grade intervals here. The drilling and mapping has revealed that there are apparent northwest-oriented structures that host these higher grades. So some of our drilling was designed to target those. We have more work to do there to continue to add silver ounces simply by defining those, but we have a good first picture from our program. And really, as I mentioned, the key factors resulting in the high conversion rate, 95%, were the amount of historic drilling you can see that we could be confident to use, and the realization that the near surface silver mineralization is continuous and predictable, and that we feel the geology is well understood. So section B is kind of through the middle of the deposit. And this is a fun section, and we were quite excited about this. So when Dr. Pratt was mapping, I've mentioned the bedding measurements before. Those are really important because all the measurements he took, we could then model dips of the beds. So towards the Calico fault, for example, he had said to us, you know, the beds are dipping towards the fault. You might see thicker areas of the stratigraphic package because of that. And so there were some strategic areas. We planned some specific deeper holes to test that hypothesis, and they turned out to be the case. Of course, these are RC holes, so getting stratigraphic measurements in the subsurface weren't possible with those, but this is the kind of thing we will follow up with some of our strategic core drilling. But we did really see further repeating silver mineralization at depth, and we think that's also because of folding. So you'll see the 2022 MRE pit outline here, and then the 2023 with our new drilling. That's extended the base of the pit by 50 to 100 meters. And even at the base of the pit, we've intercepted some nice intercepts, like 321 grams per ton over 3 meters in this hole 59. And then the other important thing on this section are these near vertical faults. So of course, this is interpreted at depth, but we do have measurements defining this at surface. And we also see the steepening of that contact between the barstow and the pick handle as we move towards the north of the deposit. So it's just creating opportunities where we continue to see what we think might be thickening of the package and possibilities to continue to add to the silver mineralization. Section C at the north end of the deposit kind of shows a similar story. So you can see there's still opportunity to add inferred ounces, but can do more conversion to measured. You know, this is kind of inferred here. We do have a little gap. But again, this was a really good section. And of course, it's hard to show 3D in 2D. But some of our holes, you know, they weren't all designed for infill drilling. Some of them were designed to really just get a solid understanding of the structural environment. And so we wanted to better define that barstow pick handle contact. So here in the north, you know, this looks like it's in the block model. It's not, it's just behind the section. Here we better define the contact between the barstow and the pick handle. We've confirmed it steepens here. So again, some deeper drilling might get us more silver. I'll remind you that, you know, this package here is 100 meters thick in some areas. So definitely deeper drilling might find us more exciting things. Also of note is we continue to see these high-grade intercepts across the entirety of the deposit. So this 417 gram per ton over 4.5 meters. Even though the distribution of these samples, we haven't been able to tie together quite yet, we do see these trends of northwest-oriented high-grade structures. So that'll be something we want to prove up as we do more drilling. So the gold resource estimate, as Tom mentioned, it's modest, 70,000 oxide gold ounces. There's also growth opportunity here, which we were actually very excited about. And some background, when we were building the first resource last year and going through Pan Am data, our modeling geologist, Chris, really identified that there were one particular section where the horizon of the lower barstow in contact with the pick handle was consistently mineralized with gold in the range of, you know, 0.1 to 2 grams per ton. And so he worked to kind of better understand the spatial distribution of that from that historic data. And so we could then follow up on that. So that information combined with Warren's mapping and the knowledge that this area over here, which we've called the Bircham Mine in news releases, this was actually the only gold mine in the entire Calico district. It was 2 high-grade northwest-oriented structures that had limited underground mining for gold. So we already knew there was gold mineralization at surface in this area. Drilling in this area showed it continued and dove underneath the silver, and I'll show you that on the next slide. So what we have here is in purple. All of this drilling is gold at over 0.1 gram per ton intercept. The block model is 0.3, but I mean, all our previous disclosure has been 0.1, and of course we know cutoff grades change. So that's why the difference in, you know, the grades we show in the holes and the blocks. You'll also see surface samples here, and those are all surface samples above 0.1. So those are our surface samples. We collected over 2, you know, reconnaissance campaigns last year. Grades typically range from 1 to 10 gram per ton on those samples, and we had one stellar 211 gram per ton collected at a nice structural intersection. So what we're seeing here is the dips of the Barstow beds actually deepen towards the north. So this is an anticlinorum that dives northwest. So these gold mineralized beds appear to be diving underneath the silver. Here we interpret the silver as eroded off. We had some great drill results. We think, more than 60 meters of the underlying volcaniclastics of the pick handle were mineralized with gold, 0.4 grams per ton in hole 80. So opportunity not only lies in exploring to the southeast here onto our BLM lands, which have never been drilled and need more mapping, but also to understand how much of the pick handle is actually mineralized with gold, not just the basal Barstow, and then continue to test deeper, as I mentioned, if the Barstow's really thickening here, like our initial deep drilling is showing us, is there more gold at depth? So this is exciting for us because adding to the metal inventory, we were successful at, but we think we can continue to do that. And here's some rocks. So just some examples of some of the mineralized rocks here. So this is a Churty silicified sandstones and siltstones. And these kind of cap, these host silver, but they kind of cap less silicified sandstones and siltstones that have higher grade silver. This is a close-up of the Churty silicified sandstones and siltstones showing these algal laminations. So there's lots of evidence here that the mineralization was syngenetic, so occurred when the sediments were soft. We see sand dikes and we see algal features and we see stromatolites. So even though you can't see silver, the rocks are pretty amazing here, and it is a fascinating world-class deposit geologically. And silver in silver. So these are the typical bedded sandstones and siltstones underneath those silicified rocks that host higher grades. And this is an example of the upper pick handle. It's a lapilli tuff breccia. It's highly altered, looks like steam heated alteration. But we do have adularia, and this hosts disseminated gold at the contact with the Barstow sediments. And the basal Barstow sediments actually also look like this. They have more of a sand tuff component. And in logging chips, it's hard to tell them apart. But with our amazing multi-element chemistry data, it's not hard to tell them apart and model them. So we were pretty successful at defining these zones. That's it for me.
Thanks, Cathy. And we'll talk more about our confidence in the resource. And I think one of the things that does differentiate us from a number of the other groups that are out there is that tremendous detail and attention to detail and technical input that we've used to actually come up with these calculations. At a higher level, I think Waterloo does provide some tremendous leverage to silver. It is a robust resource. If you look at the base case, as Cathy said, of 50 grams per ton, and if you compare that to other cutoff grades of disseminated type silver systems that are currently in the peer group, I think you'll understand that that is reasonably conservative. But it is robust. If you up that to 75 grams, you can see that but MNI still is going to give you on the order of around 75 million ounces of silver at Waterloo. And at the other end, and the leverage to silver prices go up, you can drop that price silver price down to 25 grams per ton. And you're looking at 125 million ounces in the MNI categories, and 100 of that being measured. Part of that is a lot of that. Well, some of that is due to the strip ratio, which Cathy mentioned. And amongst our peers, I think we do have the lowest strip ratio of basically 1 to 1, which is got huge implications, obviously, as we look forward to development.
I'm having mouse issues. There we go.
Okay, and look at this. You know, as I mentioned when we started, I do think that there is a real opportunity here to recognize some value that currently I think is not really being recognized. And you know, this is a comparison of ourselves with others within this, you know, pure silver group. And just a couple of things about this. I've only included people's M&I. I've also only included silver ounces in that M&I and the average silver grade. So as we look at people who are promoting a silver story, and you can see a couple of things from this. Number one, we are, you know, one of a very small number of groups that are operating in the U.S. And when you compare to the other groups, I think that our resource absolutely stands up, and especially given its simplicity and its low development risk. You know, if you look at the group at the other end, Suma, good exploration group. You know, compare market caps of that great exploration group versus us sitting with 110 million ounces of silver. So I think here the location gives us some real potential value. I think look at the grades of these resources. Now, obviously, we're comparing some underground development opportunities with some other open pit, but one thing also that I think people need to really start to focus on and understand and get into the detail. You know, I won't name names, but I can tell you that there are resources sitting in either MRE or both here that have been declared at $30 silver, which is aggressive, shall we say. I do think when people look at the detail, and that's one of the big reasons Cathy and I like to hold these webinars, is to make sure that people understand what we are doing and what is going into our, you know, preliminary resource calculations, the work that we're doing on the drill front and on the de-risking front.
Whoops.
So looking forward, you know, what are the next steps for Calico? And I'll focus this on Calico. There's other things that we're looking at more broadly, which I'll touch on. But first, you know, we still have opportunity to grow. So as Cathy mentioned, that oxide gold resource at Bircham has definitely got room to expand, and we will look at that. We have talked in the past about barite distribution, and you know, I can tell you that we've been working at trying to incorporate that into this latest MRE update, but we were unsuccessful in getting the information that we needed to be comfortable. And so we'll continue to look at that because it is an opportunity to grow the value there at Calico. And you know, we've still got opportunity to expand the resource. As Cathy said, there's more high grade that can be identified, and there's room to grow it at depth. As we showed, we were successful in doing that in the 2022 campaign, and there's other opportunities Cathy has pointed out where we think there may be unrecognized mineralized Barstow formation at depth. We haven't touched Langtree in 2022, and there's some very high grade intercepts at Langtree, over 6,000 gram per ton material from previous drill programs by previous operators. We can and will start to better understand, especially now with what we've learned at Waterloo, how we transfer that to Langtree and really start to try and add some value at that Langtree property. We will continue to de-risk. We've got plans for this year to focus on the final pit design information. We're going to need some geotech to do that, and we will be doing a second phase of MET. I look at MET and metallurgical process optimization as another key aspect of this resource. We've got to make sure our MET is representative of the entire deposit and the styles of mineralization that we see. As well, we are going to be spending some effort on looking at ways to optimize that process. not just focused necessarily on ensuring maximum silver recoveries, although obviously that's important, but we've got to also see if there's techniques and technologies out there that'll help us reduce some of the inputs, water and power, into some of that metallurgical processes. So we'll be de-risking that way, and again, related to de-risking, we'll start to get into some design aspects once some of these other things fall into place around geotech and around finalization of process. So those are what really the focus is going to be for us in 2023 at Calico, and more broadly with Apollo. We all know right now that precious metals and silver can be a bit of a contrarian investment. And it is contrarian for the entire sector, which really does mean that there are opportunities out there that maybe haven't had the market recognize the kind of value that they represent. And so we are looking at a number of things to see if we can recognize that value before others do, because the other thing that we have behind us is capital support. So I think 2023 is going to be another strong year for us from a delivery perspective. I think there's going to be a real opportunity for us to actually achieve that re-rating opportunity that folks have heard me speak about in the past. And with that, I think we'll wrap up, and we're happy to take questions. Okay, here's a couple questions. I've got one here. How much more drilling is required at Waterloo? And I'll answer part of that, and I'll hand over to Cathy. I think from a advancing perspective and a de-risking perspective, we're very comfortable with how robust the resource is at Waterloo. With 90 million ounces in measured and 20 million in indicated, we're really looking at focusing our drilling on the de-risking aspects, the metallurgy and the geotech. But as I mentioned, there's some drilling we can do, especially around the gold, and maybe Cathy, do you want to touch on that?
Sorry, especially around what, Tom?
Around the gold and expanding that gold resource.
Oh yeah. Yeah, I mean, it's too early to say how many meters of drilling we need for the gold. What we would like to do is go out and do some more surface mapping, particularly, in that Bircham area, but to the southeast, to the edge of our tenure, because all our work has been focused on the private land to date, primarily. And do more surface sampling, map the structures. In terms of core drilling, we plan to do geotechnical drilling in conjunction with Stantec, and we have a geotechnical engineer helping us out, and more metallurgical test work. So yeah, the meters are yet to be determined.
All right, thanks, Cathy. There's a question here around the MET results that we put out a couple of weeks ago, and the question is, what are the operating mines and what are the grades and the recoveries? I can tell you one of our the type operation that I look at and think about when I think about what Calico could look like is Rochester, which is a Coeur silver operation, a similar mineralization style in that it is, that epithermal precious metal, silver dominated, disseminated through a package. And my recent kind of review of their, in fact, it was their BMO presentation. I think their resources are stated at grades of around 39 grams per ton, but in that neck of the woods, but I'd be happy to be corrected on that. And I think their recoveries, again, happy to be corrected, but we're in that sort of 60 to 65% range. Kath, do you know of any others that specifically Stantec would have and our metallurgic guys would have looked at?
Not specifically. I do know, they had a team of mining engineers and metallurgists looking at various operations. I didn't get a list from them, but yeah, comparable.
Okay. And just want a bit more, coming out of Rochester is they've incorporated HPGR grinding into their flow sheet, and we did test that, and we talked about how that does help liberate and increase the recoveries of silver. So that is something that we'll continue to look at. Another question here, I kind of answered. Somebody's just wondering, again, I won't name the company that they've mentioned, but yes, there are groups in California that have been challenged and have had challenging times trying to get permits and that kind of thing. And I'll say that, the two things again for us, I think we're in the right county. Well, there's three things, and I underplay this one a little bit, but there is three aspects to this. We're in the right county. We've got the best kind of title that you can have, and we've got a team that has got experience in this space. And Cathy and I, before we set foot on the ground, we started speaking to various stakeholder groups to try and understand their concerns and get their input. So Cathy and I have got some experience in this space, and the folks in California, from the regulatory perspective, I think respect us for a lot of the way we go about doing things down there. There's next another question here. What are the follow-up steps for metallurgy on your path to pre-feasibility? Look, quite simply, obviously we've got additional material already that we are starting to work with Samuel Engineering, who are met consultants with us and with Stantec. And we're designing some programs with that additional material. We will also be doing some PQ drilling, that's large diameter drilling, to get additional large samples to again ensure that whatever process we come up with as a way forward to incorporate into a feasibility study is representative of the deposit. So we'll be talking more about the program design for some of that MET testing in upcoming releases. Question here, are you planning on completing a PEA following this, or are you considering going straight to PFS given the level of confidence in the resource? That's a fantastic question. And I will say right now that for me, I think we're still debating that internally. There are a number of pros and cons either way we go. I have certain feelings, which I voiced before, on preliminary economic assessments. A lot of the feedback that I get from the market on PEAs isn't necessarily positive. And because we have such confidence, I think it's not a step I feel necessary that we do. Because again, we have such confidence in the work that Cathy and her team have done and the resource that we have. Okay, here's a question here around water and how difficult it is to get a water permit, and this is something that I have spoke to in the past. We're in the Mojave Water Basin, and we are in what is called the Inland Empire and High Desert. Okay, water is sensitive in southwestern U.S. There is absolutely no doubt about that. Okay, water is going to be something that we'll be focusing some attention on as we advance. That's one of the key de-riskings that we need to do. In this situation, we will be looking at buying existing water rights. That is not unheard of in the Southwest resource development context. Nevada, Arizona, and California are all similar. We do have other, I think people who watch the story have heard me speak about some work that we did on potential water resources within our own area. So we went down some historic holes and got some water quality work done, and we've also re-drilled some holes to better understand some of the hydrogeological aspects of the potential water beneath our property, which I'll be clear, we don't necessarily have rights to. However, if there is ways where we can do some water swaps, with the various water authorities. Those are things that we, will look at. But yeah, look, water is something that we need to continue to focus on. Yeah, a lot more questions. Again, I think I've answered those. Cathy, you mentioned the mineralization wireframes were not used to constrain the block model. Can you please elaborate on this?
Yeah. So sometimes when people do resource estimates, they create these grade shells to define the boundaries of their mineralization. And sometimes then those can be used to form boundaries calculating their block model. We didn't need to do this. We have the package of mineralized sediments well defined on its southwest and northeast side, at least near surface. So that Barstow pick handle contact, for example, and the Calico fault. So it wasn't necessary to make the block model stop modeling outside our silver shells, if that makes sense. Yeah, it's just an estimation method. It's not wrong, it's not right. It's just something we didn't want to constrain the block model by the shells. That's all.
Okay, here's a question. Who are your largest shareholders currently? And have you talked to them after this latest report and get their thoughts? Look, that's an easy one. They go on to say $25 million enterprise value for 160 million ounce deposit approximately, thinking a lot of investors should be really interested in this story. I can say you and I are absolutely in agreement on that front. Largest shareholders are Jupiter Funds out of the UK. Joe Lunn and his team supported us when we did the financing in 2021. And I do speak with Joe and his team regularly. We haven't spoken necessarily in detail on this, but the feedback from his team briefly was, nice result. I can say that feedback that we have from our bankers, coming through our bankers, was look, everybody was happy with the result. There's no doubt about it, and the tick in the confidence in the resource. And then of course focus on, okay, but it's still in California. And yeah, look, we're going to continue to do what we can to convince people that we can work in California. And I honestly think that the best way for us to do that is to continue to work in California. Everybody needs to remember that in 18 months, less than 2 years time, we got the project, got the plan, got the drill permits, completed the drilling, and declared that resource. And I think that's, in any jurisdiction, that's a good outcome. That's relatively quick. Let's see. Okay, have you looked at the Waterman mine to the west of your current holdings? The name rings a bell, but I haven't looked at it in detail. Cathy?
No, I mean, we have a good idea of the distribution of historic mines around our property, not only in the Calico district, but across the basin. Our focus has been on our own deposit at this time, but of course we keep our eye out on other things happening around us. Yes.
All right, there's one, I think we got time for maybe one or two more. Here's one. What are the next steps and catalysts to create shareholder value for long-term shareholders and realize the value of the project? And I talked about how we'll continue to de-risk, but I think more specifically for us is continuing the work that we're doing and always try and get done around marketing and making sure that people understand what makes this story unique, what makes this such a robust and simple story. Cathy and I we're not just promoters, we're serious about trying to move a project forward, and that's what gets us up in the morning, and that's what keeps us going during the day. And I think eventually, as markets turn, the value that we have created is going to be recognized. All right. Well, I look at, I think on behalf of Cathy and myself and the rest of the team at Apollo, we really do appreciate you taking the time to understand and listen to us. I hope you have now a much better sense of the mineral resource estimate that we've announced, and not just the scale, but as well, how it is robust, and that maybe you can walk away and have a think about some other silver stories that you know about, and you now know what to kind of look for and what makes a good resource, and what makes a resource that perhaps is a bit ambitious or needs a bit more work. All right, on that note, thanks very much, everybody.
Thank you.